to my YouTube channel. It's been a long time since we made a video about the trading, and here we are back again with another video. I'm gonna show you guys because I took an entry before yesterday. I hold it the whole yesterday. I was busy. I did not manage to take other trades, but I'm gonna show you guys if you miss the snap entry, how you could be able to catch the other trade. And I'm also trying to learn something new that I'm learning, trying to look the markets more special on the higher time frame, understand what is happening, not only focusing on the intraday, but also to have the big picture of all the market so that you don't go on the wrong side of the market. So without delaying, because I know my laptop is gonna go off anytime. There is no electricity. This is Congo for you guys, so bear with me. I'm gonna record it fast. So the only thing that I saw when this monthly start going to the upside, when it's open, I remember I took an entry here, but I closed. I'm not gonna explain it today, but I'm gonna try and do it later on. So the first things that I saw was, okay, I see this monthly key level. Can you see this one? This monthly key level. So let me zoom a bit. I see this monthly. You see this area? This area, what I was expecting in my mindset was, if markets create this strong eye, meaning that markets are supposed to do something like this, get here and take over from there. But market didn't do that. So market did another thing. Instead of that, market just break this zone, then it starts dropping like heavily. So when it was dropping heavily, this zone was still a fresh zone. It was still a fresh zone. Then what I said, okay, let me see, because market is going to this area. So the only thing that I want is for market to do it, to to get to a point where we're gonna do it, we're gonna sell. So when I saw that, I went to weekly. Oh la la, sorry guys. When I saw that, I went to weekly time frame. So when I go to weekly time frame, the only thing I saw again on the weekly time frame was this one. Then I say, okay, since weekly time frame is already give this zone here, what must I do? So I go and change. Remember this QM stuff where markets run the previous candlestick, then it drops. So for me, it is still a fresh zone where market did not use properly. Then I see market is coming and touch. So I took the entry from there straight. But what is daily showing you guys? This is what I did for me to be able to take that entry. From daily time frame, I come, then I see this zone here. You see what is happening here? I come and I see this one. That was my refinement. Then from here, I did not even wait to see what is going to happen, how is the market doing, what is happening next. Then what I did was, straight from here, I took my entry. So I took my entry straight, was somewhere here, yes, if I'm not mistaken, was somewhere there. That is why I took my entry. So let me show you guys first my entry before we go anywhere further, so that we can check. Do you see? And my line is there. Then I took my entry there, so that you know, like, I'm not making up a story. So when I took this entry, and if you check, according to the way I normally trade, I understand that market was creating what you call a range stuff from here. You see, we've got that eye, and then we've got the low here. And if you check, from what we understand regarding the range things, oh la la, sorry guys, from what we understand about the range things, we know already, if market does something like this, where we go up, we come down, we take out this one, then markets come and break again this one here. So we create the first QM. For us to confirm again the range, we have to do something like this. We take again this one, then market goes to the upside, then it creates this one. So if markets come and take this one and start going, but this is in terms of low time frame, then we need to understand also what is the higher time frame telling us. So by my understanding about this one, I know already market does something like this, because we take out this one and we come and break all this low. What about all this one, the inside? This one become the liquidity that market has to do it, market has to target. And if you ask me where is the range things, then I can tell you After market take this one, the way you can see, it's come back to the downside and starts buying from here to go to the upside. But if you check to the left side, they respected something here for them to do it, to start flying. This is what I saw. When I saw like that, then I said to myself, you know what? Let me just uh, let me just take the entry from here. Then I took the entry. And where is my target? I'm targeting this area here. That is what I'm monitoring. Because if monthly, we see how this monthly is going to end. But if it ends properly, maybe we target this eye. So let's see how it goes. Now, how do you take the entry if you miss this snipe entry? Like the way I took this snipe entry. You know, snipe entry, it's a higher risk entry. But the only thing that you need to see, you need to monitor price inside this zone so that price can show you that I'm willing to go to the downside. Not just because you see like that and you want to jump already like the way I did. It was a risk trade. But if you go, example, let's say you go to M15 from that zone, then you're going to see how market was been playing. Remember, this is the area where I took entry because I took my entry exactly somewhere here. So now what we want to do is going to be, we want to try to understand what is happening inside this zone and how was market going to the upside. If you check properly the way market was going to the upside, market was going like it's compressing and creating higher high, higher low, higher high, higher low. Then at the end of the day, the only thing like you as a trader, if you want to take a trade, you need to wait for market to show you direction. That is what I always tell people. Just keep your patience and wait for market to show you direction. What is that I mean by direction? It's market showing that, okay, I'm willing to do it, to go to the downside. This is what happened. Guys, this is what we trade every single day. This eye, when it dropped to the downside, it created this low. Then this low, it went to the upside and created this eye. But how do you monitor that market is gonna do it, is gonna sell? You have to wait for market to show you this direction of saying, I'm willing to go to the downside. How do you know that? Is when the market is gonna come, take out this low because this is your range things that you are trading. Then when markets come to the downside, market break this one. So then you need to look for liquidity. Where is your liquidity area? Inside this range, because the new range is gonna be this one to the other one. Why is this one is gonna be your range? Remember I told you guys, market has to do something like this. Take out this eye, this low, then break this eye, the one created this low. Then you know already, okay, you're gonna do it. You're gonna focus when the market is coming. So on top there, we need to have something like this. You see, we need to have something like this that run liquidity, and the market has to come back. You see, come back from there, or maybe market sometimes is gonna create something like this. Then you know already this one is gonna be liquidity. So you wait for market to come and take out. Then you target again this low. So simple. As long as you understand what you're doing, then you know that all this was just a liquidity area that market created, and where market run, the level was here, market run, and we break this one inside this range. So this zone here become your perfect zone where you're gonna do it. You are going to monitor your trade. So this is what I'm showing you guys, is the way you could take the entry with a confirmation, a proper confirmation. Because remember me, I took my entry exactly here. Then that was a higher risk entry. So you need a reduced risk entry. Reduced risk entry is going to be somewhere there. Then if you go to M5, you're going to see there is a fair value gap there. So there is inefficient price somewhere there. After market run, you see, after market run this low, then market pull to the upside. So how do you take your trade? Then you see, because for me this side there was no proper confirmation that I could say, okay, someone need to risk. But if you need the advanced entry, this is when you could take this one, or you could wait for market to come and take again. But this one I'm trying to show you, this is the higher entry that you could make and take this trade without even a fear, because you know already market is already done what we normally follow inside the market. Because market creates this QM things. Where is that things to draw? If you can check, market create the QM things, then you see we break, then markets come back to run all this. This is what this was liquidity, the internal liquidity. That is what you know. Like, okay, if market is already created that one, then what do you wait for? I'm waiting for market to come and run this one. You see, this one. When market run this one, then you take your entry there. That is a perfect entry. Even if you want, you could just say, I'm getting the entry here, then your stop loss, you put it above. But as long as you know market is not gonna go there, even above is fine. It's like 15, 13 pips, then you are done. So where do you target? You target this low, because this low is weak because it failed to take out that eye. That is your target. You target this one. You don't have to stress yourself. You target this one and you wait for it here. Guys, you know, this is normally how I trade, and you know, this is what I like. Then from there, the same story again happen over and over. You see this eye? You see, when it come back here, this eye here. How do you see it? It's again a strong eye, because we took out this low. Then this low fell to hold here. Same story, same scenario. You have this zone here. But if you go to M15, then you're gonna see. Or if you want, you can use M5. Very simple, guys. Very simple. Nothing complicated. But here there was just a magic. You see this candlestick, the way it went. It went all the way to the downside, then pull again up. The next minute it come again to the downside properly and come back. So this one could be again a perfect entry that you could take from here. Your stop loss again. If you want for your safety, you could say I put my stop loss above. But since you know there is that in a fee, that hidden base, you could just get here. Then you target again. Where do you target? The same thing that I normally tell you guys. You target this low or this manipulation. That is your target. Then you take it down. The same thing happen over and over. This is what your liquidity. This is what the inducement stuff. Then you take it. Now here come another story. So you normally look for what is telling you, how market is showing you. You know already this one is the internal liquidity. This one is the internal liquidity. So I'm going to show you something here that, guys, is very proper. This is internally liquidity. You see this one? So we expect market to come and run it. Then you target this zone. You see? That is your area of price where you could say, I'm going to come and take an entry. But if you don't understand about this one, what about this? What about this, guys? First touch, second touch, and the third one. 3D. You see? The 3D was there. Then you take your entry from there, make it run to your point of interest. Then your target, you can target all this. You see, all this, they are just liquidity. All these things, they are just liquidity that is sitting there. You could target this one, could target, and at the end of the day, the major target that I'm trying to see is going to be this one. Here also, you could get another perfect entry. You see this low, it failed to take out this eye. This one could also be again another entry where you could take your trade. Then it fell, it come back again, coming to mitigate this mitigation block. Then you trade again, take out this low. You see, we run, we come, we take it out. So now the major one that I'm trying to look at is gonna be this one. So guys, this is the simplest video ever that about the entry of yesterday. If you fail to take the trade from the snipe entry, how you could be able to catch the other movement. Nothing complicated. And if your target was just, let's say, 100 pips a day, you could just make a lot of cash, a lot of it, without even asking yourself so many questions. So I hope you guys are gonna enjoy the video, and I'll try to do my best. Every time I take a trade, then I'm gonna make sure I record the video and send to you guys and post to you guys. Sharp, enjoy.